Okay, so you know how these days it feels like every other ad popping up promises like amazing investment returns? Especially with all these apps.
Oh yeah, definitely. It's everywhere. And that idea of easy money, it's powerful.
Totally. And look, we get some really interesting materials sent over this week, focusing on a pretty recent big story, this mobile app
Yeah.
promising users a massive 20% return.
Right, the 20% one. I saw that. And the source diving into it is Dr. Puyan Gamari, the Swiss economist. He really breaks it down.
Exactly. So our mission today, it's pretty straightforward, isn't it? We want to figure out how this app pulled people in, what the warning signs were that maybe got overlooked.
And crucially, how folks listening can spot similar things and, well, protect themselves.
Yeah. Think of this as your like deep dive shortcut to understanding this specific threat. No need to wade through everything yourself.
Good plan. Because what's really striking is how these things exploit basic human psychology, but then use modern tech to amplify it all.
It's not just this one app then. It's about the playbook they use.
Precisely. Understand the tactics, and you can spot them anywhere.
Okay, so first things first. That number, 20%. Dr. Gamari points out how powerful that lure of quick, high returns is.
It makes perfect sense psychologically. Compare 20% to like a standard savings account rate. It sounds incredible.
Almost too incredible, which, spoiler alert, it was. It's like our brains are sort of wired to find the easy path to a reward, right?
Absolutely. And these schemes just latch onto that. They kind of push aside the logical part that should be screaming risk.
And it taps into that impatience too, doesn't it? Especially if you're maybe new to investing. You want results fast.
Definitely. These apps make it feel exciting, almost like a game. They promise these huge returns and totally downplay or just ignore the actual risks involved in, real investing.
And the marketing push behind this specific app.
Wow.
Dr. Gamari really details their strategy. They were all over social media, Instagram, Facebook, YouTube.
Oh yeah, a full court press.
But the influencer part was interesting. Using people, often without any finance background, flashing these supposed big earnings.
That's a really common tactic now. And sometimes the fact they aren't finance pros makes it seem more relatable. Like, hey, if this regular person can make bank, maybe I can too.
Yeah, I see that. It lends this sort of borrowed credibility. People trust an influencer for lifestyle stuff and then just extend that trust to, well, financial advice they're not qualified to give.
Exactly. And Dr. Gamari touches on social proof here. You see someone you follow showing off gains, your brain kind of lowers its defenses. You think, okay, maybe this is legit.
Even if you don't understand how it supposedly works.
Well, especially then, maybe.
Right. And it wasn't just the influencers, was it? The ads themselves, the website. Dr. Gamari calls them polished. Professional-looking site, slick videos.
Yeah, they build this whole facade of legitimacy. Cutting-edge tech, trustworthy platform. That's the image.
And then the sign-up. Seamless and painless, the article says. Super quick to get started.
And then you see that dashboard, right? Clean interface, showing your money supposedly growing day by day.
It feels real. It feels easy. That immediate positive feedback loop.
Exactly. It's all designed very carefully to build your confidence, make you feel successful early on, so you invest more, both, money and emotion.
Okay, so let's get into the mechanics. How did it actually work? Because clearly, these returns weren't coming from legit investments.
No, not at all. Dr. Gamari is clear. It was a classic Ponzi scheme, pure and simple.
Can you just quickly break down what that means? A Ponzi scheme?
Sure. So basically, a Ponzi scheme doesn't make money from any real business or investing. It just uses money from new investors coming in.
To pay the returns promised to the earlier investors.
Exactly. Think of it like, well, a pyramid. Money flows up from the bottom layer, new investors, to pay the layers above, earlier investors. There's no actual value being created.
So those 20% returns Dr. Gamari mentions were just fake.
Completely fabricated, as he puts it. No real trades, no market wins. They might make small initial payouts look real to build trust, get bigger sums invested later.
So it works.
Yeah.
As long as new money keeps pouring in.
Right. It's totally dependent on that constant inflow.
Like a house of cards then. If the new money slows down, or if lots of people try to cash out at once.
That's it. That's the breaking point Dr. Gamari describes. The scheme collapses, either it runs out of new funds or the operators just disappear.
Vanish with the money, leaving investors high and dry.
App stops working, website goes dark, everyone's locked out, and the money's gone.
And the fallout for those investors. Dr. Gamari uses the word devastating. You can just imagine.
It's awful. It's not just the financial hit, which can be huge. People invested small amounts. Others put in large sums.
But it's also the feeling of being tricked, right? The betrayal, guilt, maybe shame. Dr. Gamari mentions all that.
Absolutely. That emotional toll is massive and can last a long time. You lose trust, maybe feel foolish, which can stop you seeking help or even trusting legitimate financial advice later.
Yeah, that loss of trust is a big, maybe less obvious consequence. You might become wary of everything.
Exactly. And it just highlights the huge unfairness. Investors lose savings, maybe life-changing amounts, while the scammers allegedly make off with millions.
Okay, so this is grim stuff. But the crucial part for us listening is learning from it. What were the warning signs, the red flags Dr. Gamari points out? Let's list them.
Definitely need to know these.
First, unrealistic returns. He specifically flags anything like 20% or more. That's got to be the big one.
Right? Without a doubt. If it sounds way, way higher than typical market returns, your skeptic meter should be going off the charts. Real high growth potential always comes with high risk. Guarantees of huge returns. Huge red flag.
Okay. Next flag, pressure tactics, being rushed, limited time offer, stuff like that.
Yep. Legitimate advisors want you to take your time, understand things. Scammers use pressure to stop you thinking clearly or doing your own digging. If you feel rushed, just step back.
Makes sense. Then, lack of transparency. They won't tell you exactly how they operate, where the money goes, how they really make the returns.
Absolutely critical. A real investment platform should be open about its strategy, the risks, everything. If they're vague or secretive,
Oh,
avoid.
very clear. Another one Dr. Gamari stresses, an unregulated platform. Checking if they're actually overseen by a proper financial authority. Why is that so vital?
Regulation provides guardrails. Bodies like the SEC or FINMA enforce rules on transparency, how client money is handled, investor protection. Unregulated platforms operate in a sort of Wild West, much easier for fraud to happen and much harder for you to get any recourse if things go wrong.
Right, no safety net. Okay, and the last flag from Dr. Gamari's list. Celebrity endorsements, being wary if they lean too heavily on influencers, especially if the influencer's own success seems a bit shaky.
Yeah, endorsements are just marketing. They should never be why you invest. As we said, the influencer might know nothing about finance and might just be getting paid to promote it. Don't let star power blind you.
Okay, those are the warnings. Now the flip side, how do we actively protect ourselves? Dr. Gamari gives some practical steps. First up, do your research.
Absolutely fundamental. Don't just take the platform's word for it. Look for independent reviews, news articles, check if they've had past issues or complaints. A bit of online searching can reveal a lot.
Sounds obvious, but clearly essential. Next, he advises, consult a financial advisor, especially if you're not experienced.
Yeah, getting unbiased professional advice tailored to your situation, your goals, your risk tolerance, that's incredibly valuable. They can help you see through the hype.
Good point. Then understand the risks. Be wary of anyone downplaying risk or, worse, guaranteeing returns.
Because every investment has risk. Legitimate platforms are upfront about that. If someone promises guaranteed high returns with no risk, run away. It's just not how finance works.
Simple as that. Okay, and circling back, use regulated platforms. Make sure there's oversight.
Yes. That regulatory layer is a crucial form of protection. It means accountability and standards are supposed to be in place.
And finally, maybe the simplest but hardest advice. Trust your instincts. If it feels off, seems too good to be true.
It probably is. Seriously, that gut feeling is often right. If you're feeling doubtful or pressured, just walk away. There are always other, safer opportunities. Don't let FOMO, fear of missing out, push you into something bad.
Yeah, that's solid advice. You read Dr. Gamari's article, and you really get the sense he's passionate about financial literacy, about stopping people from getting hurt by these schemes.
Absolutely. His work highlights just how needed that education is, especially now with digital finance evolving so fast.
Yeah.
Giving people the tools to spot scams is probably the best defense we have.
So wrapping this up, the big takeaway really seems to be, watch out for those crazy high return promises. That 20%, that's your giant red flag right there.
Exactly. It doesn't matter how slick the app looks, how convincing the marketing is. If it sounds unbelievable, it almost certainly is.
This case was just a Ponzi scheme wearing modern clothes, playing on that basic human desire for easy money.
Precisely. And for everyone listening, maybe the final thought is, this isn't just about this one app. The tactics are out there in other forms.
So the question to mull over is, what other things in the digital world might seem too good to be true right now?
Yeah, and how can you apply these same principles, caution, research, skepticism, beyond just investment apps? It's a changing world out there. Staying vigilant is, well, it's just essential.